What have you found?
All I've found is that these red lights keep moving back and forth. Aside from that, this thing seems to have no other function whatsoever, sir.
Well, that's impossible. It must have some sort of function. I mean...
Hi guys, welcome back to the channel. My name is Dave, and today we're taking a look at ULTY from Yieldmax. Now, this is one of their products that has this extraordinarily high distribution yield, and it distributes income, maybe income, every single week. But high yield does not equal good product. We have to dig a little bit deeper. So let's take a peek inside. If that is what you're looking for, please stick around. Whoop. All right. Let's start as we typically do with a quick look at the website here over at Yieldmax. Now, Yieldmax is focused on building ETFs with this objective, this focus of seeking current income. This is done typically through options. ULTY certainly falls in this category with a current distribution rate, as it shows here, of 88%. Wow. I mean, but that is how it's set up. It's called Yieldmax for a reason. So as you can see, if we scroll down, they make a distribution now every single week. And I would not call this income. Sometimes it is, but often it is a combination of actual income from the option strategy that they use, and sometimes it's return of capital, and sometimes it's only going to be return of capital. I mean, we're talking about 1 week. You're not always going to have a positive return every single week, so it can't really be just income, right? Now, the inception date for this guy was, let's scroll down here. Inception date was 2/28 of 24. It has an expense ratio after this waiver of 1.3%. or 130 basis points. That's expensive for any ETF. So now they are actively managing this. They're making lots of strategic moves when it comes to the options. So you are getting something for that 1.3%, but that's really expensive. Now they have $3.2 billion of net assets under management. So a lot of believers here have invested their money. And holdings. So this is where it gets interesting, right? So if we go down here to holdings, this is as of 8/18/25. This is actively managed, and they are picking the stocks and rotating along the way. So what you see here might be different in a month or two, right? It is at the discretion of the manager to select the stocks. And they also have free will to put on option trades as they desire. So you really need to trust their ability and experience. And the current holdings show the positions are all set up as option callers. So they're long stock, we're buying stock, then we're short a call, right? We're selling calls, and then we're buying puts as protection. So they seem to consistently keep the call side slightly out of the money and the put side further out of the money to take in a net credit, and this is hopefully the income that they can distribute along with any stock appreciation that they can get from selling out of the money. And I think this is probably the most important point right now is using this type of color strategy consistently with any stock or ETF allows you to define your risk reward. Okay, so you can pick the best or worst stock in the world. You can hand it to me. I'll apply a color strategy, and I'm going to know my best and worst outcome for any particular time period. So that color strategy, the opposite side of that is it's also going to limit your potential return. So there's always going to be this push and pull, right? This trade-off with a color strategy between how much risk you take on, which will drive your potential return, both as a gain and as a loss. And Applied Materials is a great example from this past week where that color strategy came into play in a big way. So you can see their position here with Applied Materials. Good, solid stock. I owned it in the past. I don't own it now, but owned it in the past. 825, 175 calls for this next week. 825, 155 puts for this next week. But last week, with a pending expiration of 8/15, which was this past Friday, on the options in ULTY for AMAT, it just happened to be the earnings date as well. We saw short calls there at 200 and long puts at 180. So this stock Thursday night after the close was at 188 per share on 8/14, but after earnings on 8/15, it dropped about 26 points, about 14%. to 162. Just a horrific result for people that own Applied Materials stocks. If you just owned it, it's terrible, right? However, the beauty of the long puts in ULTY, which is their new strategy, is that it protected it at that 180 strike price, and it prevented about 18 points of loss of that 26-point decline, which also was offset with some long call premium that was collected on the call side. So in other words, I'm sure there are people out there that own AMAT right now, Applied Materials, that wish they had a put on today against their shares. So while still a loss overall for ULTY, not nearly what it could have been without those puts in place. So I think that this is a good change for this fund. Dealing with highly volatile stocks this way provides some controls. So this option color strategy, certainly it can work with highly volatile stocks like this. And Applied Materials is really not too bad. Some of the other ones that are in here are more substantially volatile. But I would not expect it to have a return that would support necessarily what we see as that current distribution rate, right? Just to be realistic. And if we look at the dividend history as well, we're going to see that it's stabilizing a bit, but it is certainly less than what we saw back earlier this year, despite going to weekly distributions. And overall, I like this adjustment to the fund versus what we initially saw when I looked at this months ago. And that is that option color strategy on high beta stocks with a goal of capitalizing on that volatility. However, this option strategy change also tones it down and makes it a bit more conservative overall, which again, I think is a good thing. Now let's jump over to Seeking Alpha and take a look at ULTY. And by the way, I am a Seeking Alpha affiliate. There are affiliate links down below if you're looking for a stock and ETF research tool. And for alternative ETFs like ULTY, it is absolutely the best because you're going to get all types of analysis from different authors here. Those that want to sell it, those that want to hold it, those that want to buy it. It's a great way to reinforce what you already think. And, I can't change your mind anyway. But it's a great way to reinforce what you currently think. And I think it's the best for alternative ETFs anyway. So yield here, it's going to show you 121%. That's because it's the TTM, trailing 12 months. So it's looking backwards. But looking forward, we're probably going to get that 9 or 10 cents that they've been having over the last several weeks. Right, so this will tone down over time as we get more history with this. It would be more accurate what you see over there at the Yieldmax website. And I don't think I mentioned it earlier, but stock selection for this, you might think that this is just a tech play, really, but it's really about high volatility. So high IV is actually what you'll read in the prospectus is the main driver of what they select to go into the holdings. So that might mean that you move something out to move Applied Materials in during earnings season, right? You can be making adjustments like that because of the enriched IV across earnings. There could be all kinds of different reasons for them to put something in there, but it's driven by that IV. So what I thought would be interesting here is to compare ULTY to some funds that might fall into the same category. And two that came to mind when I was thinking about this are ARK Innovation, ARKK, and AIPI. So AIPI comes to us from Rex. It's about a bunch of AI stocks, and it has an option strategy. I've reviewed it before. I'll link that up above and below. And then we also have ARK Innovation from Kathy Woods, right? And this has kind of been, you love it or hate it, right? When things are not going well, you're going to hate the ARK Innovation Fund, because it's going to get slaughtered. But in good times, when we're getting to this market that's a little bit frothy, like we see right now, right? We've been on this great run. It looks awesome, right? And holdings in the ARK fund would be things like Tesla, like Roku, Coinbase, Shopify, Palantir, so forth and so on. So I thought those would be two good comparisons because they're going to have very volatile stocks in there. So if we take a look at ULTY versus these two, total return over the last year, this is the chart that we get. An interesting year, right? We've had some ups and some downs, so we can see how it's reacted. So ULTY looking pretty good, up about 30%, right? A solid year. Can't argue with that. If you give me something and you say it's going to go up 30%, I'm pretty darn happy. Throw away yield. I'm just talking about total return. I'm pretty happy. AIPI up almost 22%. So another good fund. Again, go watch that video if you're curious about it and you like this whole AI play. It might be a good play for you to put some money. And then the ARK Innovation Fund up 75%. So you can see when we don't, limit our upside with options, what could potentially happen. Total return wise, ARKK over the last year, been a good year, up 75%. So pretty outstanding performance from ARKK. So as I sit here and I look at this chart, one statement that I hear a lot that I get in my comments section is, with this 80% yield of ULTY or some other ETF, after 2 years, it's all free. That really has nothing to do with the yield. You could say the same thing about NVIDIA, for example. Let's say that doubles this year. You certainly could sell half of that position and have half of it that's free because the total return allowed you to do it, had nothing to do with the yield. Even if it just goes up 10% this year, I can sell my initial investment and 10% is free. So don't think of it that way. It's just going to give you your money back. Look at the total return and base your decision on that. So is this a buy or sell for me? I think this ETF, which is a bunch of high beta stocks, some of which you probably have never heard about, might be best as a utility ETF in the old BAT belt. I mean, be honest, are you familiar with Rigetti or AST Space Mobile and Nebius Group? Can you tell me if they make money or are they pre-revenue?
But if you have no revenue, you can say you're pre-revenue.
A pure play?
You're a potential pure play.
I'm still trying to join the Trace Thomas Club.
It's not about how much you earn. It's about what you're worth. And who's worth the most? Companies that lose money.
And yes, we could say the same thing about some of the stocks in the S&P 500, but my point is that this group of stocks is way out on the risk curve, right? However, this ETF in my mind is really looking to profit primarily from volatility. So I think if I was going to invest, I would look to do so when the volatility is spiking so the options can do what they're supposed to do, right? And I would likely sell. I would sell right now. Right now I would be selling. ULTY is up 40% since the VIX started rolling over on April 10th this year. I looked that up. At that point, all the stocks in ULTY would be bursting with option premium. That's really the goal of this particular ETF. So let's say VIX goes over 30, maybe start to put in some money for a few months. That type of play. Similar to how someone might use TQQQ over a short period of time. As they say, there is no free lunch, my friends. If you want to step out on the risk curve and take on more risk to increase results, go for it. I think this is one of those products that can do that for you while hedging with options with some of these riskier stocks. Now, I already have some ETFs that kind of play in this area, so I won't be using this. I won't be buying and holding this particular ETF. I might utilize it, as I mentioned, as a utility ETF. But yeah, I think I can do this myself with some other ETFs that have a lower expense ratio and achieve the same results when I look at the total return. So for me, it's a pass as far as my buy and hold portfolio goes. Now, if you have any questions on this review, please ask down below. If you'd like this type of content, like and subscribe. And if you want more information on these types of products, maybe go check out one of these videos next. But again, we're busy people. Go enjoy life. Have a great night. Or go enjoy a cup of coffee. All right, have a good one.